Yes, good morning, guys. It's Sunday morning. It's about 11 o'clock here on the West Coast, well, actually in Arizona. Um, Hope you guys are having a good afternoon. Wanted to show you something that I noticed last week um, trading crude oil, and wasn't a very successful week, by the way, unfortunately. But, it is what it is. I wanted to show you guys something that I had noticed. I know that you guys, some of you guys that use Murray Math lines have complained about the Murray Math lines shifting around and compressing and expanding and doing all kinds of other things. And I didn't understand it at first, why they would move around, why they would shift around, until until I noticed something on crude oil. And the premise of the whole thing is that the Murray Math lines will, the entire range of the math lines will shift up or shift down depending on whether it's detecting a trend move outside of its normal range box. Um, Also, one of the more interesting things about this is that these guys will compress down. They'll get smaller. The distance between the lines will get smaller when it detects compression or when it detects chop. So potentially, this thing could the Murray math lines could be a really good indication of chop. Now, interestingly enough, if you look back on Thursday, this is Thursday in the evenings, you'll see the Murray math lines have come up to price has come up to the resistance level and then come back down to support. But look what happens between the range, and this range is basically the premise behind one of the premises behind Murray math lines is that when you get into this range, you will tend to chop inside the range. And that's exactly what we're seeing right here in this area, is we just see a bunch of chop, 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 chop. And so you're looking for the breakout. You're looking for the breakout since we had 57.23, which is major pivot number 2, which you see right here. We're looking for a break out of this range here. And we're not looking for, that was kind of a false breakout there and then came right back in. So you'd have to keep your stop loss pretty tight. Or just, or you have lost that trade on the breakout for the long. But this breakout for the short down from 57.23 down to down into the support area would have been a nice that would have been a nice little run. If you'd got it, say for example, at the top, if you were hitting 57.50, which is the almost top of the range right there, 57.52. When it broke up above right here, you'll notice 57.51, 57.56, and then it didn't break up above that range. So you could have shorted it when it came back down through 57.56 to the top of the range, which it never came back up here. So shorting it here at 57.50 down to 56, what is that, 57.03? That's a good almost $500 move right there. So that would have netted you that would have got you 500 bucks. Well, let me show you what I'm talking about the Murray math lines compressing, and I've got this cranked up a little bit to 120 so you can see that. This is early morning on Friday, and you already see you see value area high and value area low moving down, of course, at the after midnight, and you'll notice that came down. You just notice that the Murray math lines shifted down. Well, it detected that possible trend change. It's not an absolute. It's not a guarantee. I don't know of anything that's a guarantee in trading. If you do, hey, let me know. Let's all make a bunch of money trading guarantees. But there's no guarantee in trading. I've never found one, but I've seen some very strong indications of different things. So you're coming down to support range. He fiddles around a little bit down here, and then heads back up. I've got a moving average on there. It's a 20 period whole moving average, I think it is, and it's just basically just showing me, okay, fine, what's the trend? What's the trend change? Bounced off support. So you would get in, say for example, at the first pullback, stall weak reversal or major pivot, coming back up, and your target would be possibly this resistance area where we bounced off of. You see that that range became that resistance area, and that would be your target right there. So any of these pullbacks would do. So here we go. I think we no, we're still in this range here. Okay, you would have gotten out if you would have gotten down long here. That would have been, you know, that would have been a nice little chunk of change right there. Or if you'd understand that the average daily range usually moves at least crude oil moves at least $1 or 100 ticks, which is $1,000. You usually see that. See where the range is now? See that consolidation? Right in that range, pretty much right in that range area right here. So the Murray math lines are pretty good at mapping out this consolidation areas. Pull back to the bottom of the range with not a whole lot of risk, and then back to the upside. So let's watch this thing play out for a minute. Pull back to a major pivot, which value area, which is where value area high is. Once it breaches, I've noticed once the market breaches value area high, it usually pulls back to it and then bounces off of it for that trend move. And you can see obviously we're in a long trend right here. So this was not a reversal, value area high, and we're going to keep going up. There's nothing on that chart to me that says, reversal. So we'll pull back, another value area, and pull back to major pivot, value area high. Oh, I'm sorry, value area high shifted up there. Pull back. Now we have another range. Pull back to the top of the range. Murray math lines usually will go from one level to another, go down 2 or 3 levels. So we're watching now. I'm watching for another shift. And we got one right about between 6 and 7 o'clock, as I recall. So you got some chop here. Then it broke out of that chop range down here. It's trying to make you think that it's going to have a trend change, but oh yeah, there we go. Okay, I think that's set on constant range. That's why that thing jumped. Sorry about that, guys. Let's go back over here, replay it, and reset that. Okay, so what we're doing is we're watching this here's a little consolidation right there. If you readjusted your MMLs, you would probably see that as in that range. You would see this, and then you would see that range. But you'd have to get down to a pretty small MML to see that. I don't like to go down to that small MML simply because the thing just shifts around too much, and it gives you a lot of signals that may or may not be you might or might not want to, or you might or might not want to trade. Okay, so we're up in this area here. We just hit 749. We had a higher high, or we basically had a double top right here. So price rejected off of that before, but it didn't reject too hard. You saw it come down and then come back up almost that area, and that would have been a good place to get short, by the way. Where you're seeing lower highs, or you just waited for that lower high right there. So it pulled back up. It pulled back, and then I'm sure everybody got short. I didn't look at the volume, but there's a lot of people who were thinking, well, this is a double top here, it's going to go short. Unless you kept your stops really, really tight, you would have gotten taken out right there. Once it popped up, obvious stop run. Now it's coming back down, bounces off value area high again, and we just had an MML shift up to the upside. So trend change right there. You see a pullback again, pullback to value area high, which is our old friend. You see that a lot. You'll see a lot of value area high, value area low pullbacks, especially if once they penetrated value area high, they will tend to pull back to it, or value area low will tend to pull back to it once it's kind of a range deal. You'll see the price going back between value area high, value area low, and then once it breaks, it'll come back to it and then take off. We just had another shift, and we shifted smaller, so that's indicating that we're in a possible chop zone, which we're starting to look like. Now you can see it's starting to chop here. So the MMLs are basically telling you, warning, warning, danger, Will Robinson, do not trade here. Another pop to the upside, another stop run, probably. Pop up to here. About value area high still down here. It hasn't shifted up yet. So you would still be in a long position up here. You'd probably sit through that chop. It came back to major pivot, which gave you another entry, and then stall weak reversal. Didn't come back down to major pivot again, but stall weak reversal once it popped up. You could have gone long there. It still looked like it's consolidating and chop, but we're starting to move out of MML range. So I would expect to see a pop, and there we go. There's the pop. There's the move. There's the projection to the upside, and we're in more trend. At least up until this area here. You've got a lot of overbought. You've got a lot of stuff here at overbought. There's a pullback here. Now we're making lower highs right there. Time to get out. Time to get out of our long and start working the shorts on the lower highs. You see now that we're up in the new resistance range. Here we go, lower high, trend change, right there. Come down, trend change. So time to get out of your long here and reverse and go back to a short. And you drop down below resistance. And your value area high, it pierced value area high. Coming down, didn't bounce off, tried to bounce off. The buyers tried to take control here and didn't work. Reversed right inside that resistance zone and then came back down. So now we're at major support resistance, right there, right in between the support. Well, basically stall weak reversal line because it never came down to support. So you're looking at that stall weak reversal line there as your support zero. What happens is sometimes at the Murray Math lines, you would be able to shift everything up. So what I'd be looking for, instead of looking for resistance, a bottom of resistance to get out of my long position, I would shift everything up one Murray Math level. Since it never came back down to support, this is the new support line, stall weak reversal. So I would look at, and once that came back above the major support resistance, I would look at that as, here's my new support, here's my new major support resistance right there, and there would be my new bottom of resistance right there, 57.91. Yeah, 57.91. So I would be getting out of my long position at 57.91, since that would be the new bottom of resistance. I've been promising myself that I'm going to be writing a new Murray Math level study, which would automatically shift these lines up for you, but I just haven't had time to do that yet. Anyway, on with the show. Now we're bouncing off that major support resistance line, bouncing off the range. We've got making a nice little range. Now we're starting to break through that range to the downside. Came back down to VPOC and go back up. So it gets a little, choppy. Gets a little weird because now we're coming up on pit open. We saw that now it's starting to chop a little bit here. The Murray Math lines consolidated. They pull back down, say compressed. So some people would call that compression. Okay, now we broke through, so we're heading back down. Stalwart reversal line right there, 5708. There, 5707, 5708. That was the bottom. That was the bottom before. So I, excuse me, I would have no, that would have no feelings towards that, since we've got a double bottom down here. We're into support. That Stalwart reversal line. I would have no compunction about going long there and saying, okay, fine, let's go back up. Oh, yes, came down at 5704. Ran stops. Haha, ran my stop, didn't it? Okay, so we fiddle around. Stalwart reversal line. Pull back to the Stalwart reversal line right there. There's value area low. Great place to go long. Again, you would have taken a little bit of profit from this guy. If you kept your stops tight, you know, you're talking, maybe 10 ticks. It's pretty standard. And never came back that Stalwart reversal up. We just had an MML shift. Now they're going to shift, but we're still in the long. We still haven't penetrated down in this area yet. You're coming up on an hour into the open. We're hitting back into this 5750 area here and back into resistance, back into these overbought, back into the reversal zone. Value area high just shifted. We've got a value area high dip down there. It went right above it and broke this resistance zone here. Came back up almost to the reversal line and then came back down. So you can see these Murray Math levels shifting around as they're indicating support and resistance. Now, and let me show you here. I got it set on a standard 128 1.5. Now, the problem is that the smaller you put this thing, the smaller you put the Murray Math square width here, unless you go to the custom square width, and I'll cover that in the next video, how to work with that. If you use that, the smaller the square width here, especially on a market like crude oil, which moves, the smaller you make that thing, the more shifts you'll have and the more compression you'll have. But it will be more accurate in terms of indicating compression, but you'll get a lot more of these. So if you want to, it would probably be a good idea to make those settings a little bit larger depending on the market you're trading. So 11 o'clock, you know, now we saw a move off the bottom. What was that? 57.10, right in this area, 57.04, right back up. There's a $750 move right there, or $700 move. Right back up to our old friend, you know, resistance overbought up in this area. So anywhere up in here you could have gotten off. You could have gotten back down short here at, what's that? Bottom resistance 57.62. Never came back up to 57.67. I'm uncomfortable trading in this range simply because the distance between the Murray Math levels is like 5 ticks. That to me indicates it's way too short. I like to see at least 10 ticks between Murray Math levels here. I like to see at least 10. Otherwise, sometimes it'll come back and bite you. And now it's coming. It's fiddling around. Okay, now we're still going short. We hit support 57.23. Now we're going back up. Pretty typical since we're range bound 57.62. We're back into resistance, going. You would be out of your short, out of your long, thinking about going short down here, tight. You know, not a real tight stop, but you know, you might want to move your stop to break even, move maybe up in this area. So if it comes back up, which it just did, takes you out, go back. You might want to go back in again because you're making 57.67. It's still a lower high, so we're still in a downtrend. It's just popped up. It's just probably a stop run, but we're still in a downtrend. and you can see that here. So short at resistance again, come back down. I'm running this at 120 speed, so it's moving very quickly. So 1 o'clock. Usually in the afternoons, you don't get these long sweeping moves until about, close to 1 o'clock, 1:30, somewhere around there, and then you'll get a move that will take you into the close, the pit close, which is at, what is it, 2 o'clock, 2:30 New York time. And it's just fiddling around here. I would anticipate it to dump a little bit right at fairly close to pit close. And sometimes it does, but sometimes it doesn't. We're coming up on 1420. Okay, so we're moving out a little bit. Okay, we got pit close right there. Now we're starting to dump. Now we're starting to go back down. Okay, we went down for pit close. So if you were short there, you could have gotten out anywhere down in this area, or if you want to wait for support, you can certainly do that. We're coming into market close in an hour, just a little over an hour. So if you wanted to, you could just set all this chop out too. There's nothing that says you have to pick up every penny, every nickel on the table, or try to, because trying to pick up every nickel on the table is a good way to blow out your account, because the market will do that. The market will come back in your face. You try to trade every single little bitty pullback and reversal and come up and come down and bounce off here and bounce off there, and the market will take your money away from you. So to me personally, I'd be happy with 1 or 2 good runs a day. Again, very choppy. I'm using a Flex Renko Inverse 428 right now. The jury's kind of out on whether that's a better level. Okay, see, now we came back up and oops, cancel. And so we came back up, and that's where we wound up for the day. So that's it. We came back into that resistance area. I would expect to not see it above this resistance area. I would expect to see the market open at 6 o'clock on Sunday evening. I would think that it would be going back down to 57, somewhere in this area, 57.18. So anyway, I just wanted to show you guys, here's how the Murray Math lines, they expand and compress, and there's reasons for that, as you saw in the video. Play with it on your own charts, and let me know what you think. Thanks, guys.